Alright, welcome to this video, guys. So in this video I want to explain a setup I recently took in the GBP GPY, and it was a very good setup, one of the best setups I have seen in quite a while. So I want to make a video about it to explain it in more depth. So if you are familiar with my stuff, you know I always started the daily time frame to establish a statistical bias, and the bias happened on this particular day. Let me put an arrow there. All right, this day made the bias, and why? Because it took out a lot of previous lows. As you can see, the low of the previous day was broken, the low of the day before that was broken, and this low was broken. So three daily lows got broken and got very, very strongly rejected to the upside. And that's very telling to me, because below obvious swing points and below daily highs and lows, there usually will be some liquidity. So over here in this zone, there was some liquidity, and all the available liquidity was triggered and then absorbed by a bigger player that wanted to be long. And that's why we got this strong reaction to the upside. So that's really, really telling to me. And I wanted to be long, plain and simple. I wanted to join that bigger player that put in his long order. According to my statistics, there was a 67% chance of hitting the upper green line when I was in this trade, before taking out my stop loss, which I will put in later. Yeah, these statistics are based on past performance of a certain pattern. I'm not going to give you the exact rules of the pattern, because then I will be giving away my edge for free, but the pattern is happening over here, and I basically quantified this pattern to get statistics about the performance of this pattern, and that's how I know there's a 67% chance of hitting the upper green line before hitting my stop loss, which I will be putting in on the hourly time frame. So let's go over there. All right, so this is the hourly time frame, and this is the particular day in question. Let me draw it in very quickly to make it clear. This is the particular day in question. As you can see, all these lows, which this one was quite important, as you can see, quite a strong move to the upside. This one was a minor one, but still significant in terms of the daily structure. These two lows got broken, and as you can see, a very strong move to the upside, breaking this entire level, breaking the red line, which was a very big level. If we zoom out, as you can see, it had a lot of touches, and a lot of people think that the more a level gets hit, the stronger a level is, but that's not true at all. It's the complete opposite. The more often a level gets hit, the higher the chances of breaking it and grabbing liquidity above it, and possibly to see a follow through to the upside, which is exactly what happened over here. So I always enter at the breakout of a level once I've established the statistical bias. And as you can see, the red line, this was the breakout. I entered at the first touch, which is basically over here. So the red line was my entry. So let me draw a fib. The stop loss was below this candle. Why is it below this candle? Because in my mind, this is the entire level, the red level, and this is the last bit of resistance price made. As you can see, it moved up, and then we got a bit of a retracement to the downside of around 13 pips. So I consider that part of the level, and based on my journal, I know that if I have a clear level and I put my stop loss below here, so below the last high pre-breakout, I can get my stop loss there, and the chances of this hitting will be 67%. And the payout, as you can see, is around 1.3 R, so that's really a good edge. Another thing, this is a clear reaccumulation pattern, which Wyckoff talks about. We put in the faces for you. This was a clear spring. In my mind, this was a selling climax, a local selling climax. People will most likely see this as the selling climax because of the move to the upside. And they will see this as phase B, which would be an STB, phase B, and then this would be the spring that doesn't take out the entire range low, but it takes out the STB, which was a significant swing point, and it takes out this one. So this was a clear reaccumulation pattern. This was a clear spring to me, so that also puts in more confidence because the statistics align with the context. So I entered at the red line basically at the breakout, and we got this up and down movement, which you can always expect. If you are familiar with Wyckoff's work, this is called your phase D, and during a phase D you will always get some up and down movement. And as you can see, this is also very telling. You see this low just got taken out, and then we got the move to the upside. And that's also something that very often happens because people that buy the breakout will be putting the stop loss at break even or below the last swing because they think this will be the move to the upside, which will hit their targets, which is not the case because we got down, took out the stops, and then we got the big reaction to the upside. And as you can see, it's a very strong one. So once again, the liquidity below this low from early buyers basically got absorbed over here, and then there was a move to the upside. And that's really a perfect setup to me. The chances of hitting target were very high, 67%. The payout of 1.4 R, which is way more than enough to be profitable in the long term. And then we had this very clear reaccumulation pattern, which basically fits in with the bias I had established on the daily time frame. So a very, very clear trade to me, and yeah, it went to target pretty quickly. You might argue that it went higher. Yes, it did, but according to my statistics, it's better for me to take profit at this statistical target than to aim for a higher target. I am working on figuring out when to hold my trades for longer, because if you can hold on to your winning trades longer, it can massively increase your performance. But it's going to take a lot of time because I need to fill in my journal. I need to look for connections between my winning trades and to figure out when I can hold my trades and when I can't hold my trades, because I'm not going to do it based on gut feeling like a lot of people do. I want to do it based on past performance and based on the statistics I gather around my trading. So it's going to take a while to do it, but this edge is very profitable in and of itself. So I'm not in a rush to increase its performance. I do want to tell everyone that once you have found an edge for yourself, once you have found a profitable way of trading, you don't stop. I can just stop right now and trade it and make money, but eventually this edge will get less profitable and maybe go away, because that happens a lot of the times. So you want to stay on top of your game and you want to keep increasing the edge in one way or another. One way I do it is by looking at my journal, looking at connections between my winning trades, looking at connections between my losing trades. Maybe I can cut my losing trades earlier in the future so that my losers are smaller and that my payout on average will be higher. There are a lot of ways you can do this, but the important part is to keep improving even if you're already profitable, because that's what keeps you in the game. So I hope you guys learned a lot from this video, and I speak to you guys next time.